Hi, I'm Jeremy Searier with Mansard. So, if you were to sell commercial property in 2020, what would the market have looked like? So today we're going to wrap up the 2020 year, look at the sales trends, and talk through what happened, and then we're going to talk a little bit about what we're seeing as a kickoff in 2021. So let's go take a look. Okay, so let's take a look at how the market fared in 2020 and how we're off to, what kind of start we're off to here in 2021. So we're going to look at sales data for commercial, industrial, retail office, and flex properties in the Boston area. And we're going to focus on these three counties primarily, which are Essex, Middlesex, and Rockingham counties. These are part of the Boston MSA. We're going to take this sample set, and what we did was we pulled data in for properties that sold between $1 and $20 million. So before we take a look at the data, we're going to talk a little bit about the market cycle and where we are in the cycle for each property type. And so this is a chart from Dr. Glenn Mueller. He publishes a quarterly market cycle monitor report that we use here at Mansard to help us navigate the positioning of each property type in the market. So what you'll see here are the four quadrants of the market. There's the recovery phase, the expansion phase, the hyper supply phase, and the recession phase. And you'll see each of these quadrants are characterized by specific characteristics like recovery would be declining vacancy and no new construction. You would then go into expansion from the 6 point to 11 point, where you'd see declining vacancy and new constructions beginning, and then new construction still delivering in the hyper supply phase with the vacancy increasing, and then decelerating vacancy and more completions happening in the recessionary phase. So as we look at the volume of sales in our market, this is the number of buildings traded. And looking back to 2006, you can see the trend line for the market cycle. So 2006 down to 2009, you'd see a trough in 9, and then 10, 11, and 12, you'd start to see that recovery. Expansion would begin in 13 and run all the way up into about 2018. 19 was a slightly slower year than 18, but then in 2020, during the COVID pandemic, we actually saw a bump in transaction volume. So you will see here the 2021 numbers. So these are year-to-date numbers, and then what we do is we annualize those out. So this is around the end of March 2021. We're annualizing, so a little early to see a trend, but just to give you an idea of the pace that we're setting. So drilling into the speed of transactions, this is the effective change in year-to-date sales year over year. So looking at the velocity coming into 2019, you would expect to see a deceleration as we saw fewer buildings selling. That picked up in 2020, and 2021 now will start to slowly come up as more sales occur. So as we dig into the retail market, what are we seeing here? Well, Dr. Mueller in his forecast for the third quarter of 2021, so looking out a couple quarters from where we are today, is forecasting the Boston MSA to be at the 14 stage. That is the last stage of hypersupply before you enter the recessionary phase. And this stage is where you're seeing vacancies increase, and then you're also seeing deliveries of new construction coming into the market, and you're starting to see rents soften. Now what's interesting in our market is we're actually seeing from the end of 2020 into early 2021, the average price per square foot continue to appreciate. In fact, at the end of 2020, retail closed an average price per square foot at $272. That was up from $258 a square foot in 2019. But what we saw for retail was a deceleration in number of buildings sold. So if you look at the 2019 to 2020 time frame, you'll see there was a 5% deceleration. So what does that mean? How do you have a deceleration in building sales
and appreciation happening in the market? Well, it's probably a result of investors moving to quality in retail, looking for essential retail that is e-commerce resistant with drive-through access. Those retailers have resiliency and really carried the market in 2020, and that's what you're seeing in that average price per square foot bump. So watch retail. I think we continue to see that trend, and as retail starts to diverge, we're going to see retail that's more closely oriented to leisure and hospitality suffer more pricing pressure, downward pricing pressure, than say essential retail that's meeting the demands of the local community and being sought after by investment capital. So the industrial market closed up 22% in 2020 over 2019. So we actually saw an increase in the average price per square foot hit $123 a foot. It's amazing. Forecasting out to the third quarter of 2021, Dr. Mueller is telling us that we're still in the Boston MSA going to be maintaining a peak position in the market. That position in the market will be characterized by declining vacancy, and we would typically see new construction hitting the market. The problem is we're land constrained in this market area, and the cost to build and the cost of industrially zoned land are prohibitive. We would need to see at least a $14 net rent as a threshold rent to start to see new industrial supply hitting the market, being built by developers and users. So we are continuing to see upward pressure in industrial. We're seeing upward pressure in rents. We're seeing upward pressure in pricing. Industrial saw a 21% year-over-year increase in properties traded from 2019 to 2020. So quite a big year, and even higher in 2018, which was a peak year for industrial sales volume in the greater Boston area. So office is an interesting case. We're looking at the office market for greater Boston going into the hypersupply phase at point 13 here. And what's interesting is I think we've got a dynamic occurring where suburban office, which is primarily what we're measuring in our data, is differing from urban office. In fact, we're seeing that suburban office was a fairly popular asset class in 2020. The first quarter of 2020 saw a uptick in office trades, and we continue to see that happen through the rest of the year. In fact, if we look at the sales volume, you can see here that office deals were up 21% in 2020 over 2019, and the average price per square foot hit $149 per square foot. That's a 17% higher transaction volume in 2020 over 2019. So very interesting. We also saw the median deal size for all properties decline since 2018, down 7.56%, which means higher volumes of smaller deals are trading. And overall transactions closed in 2020 were 534 properties versus 511 in 2019, so off peak from 561 properties in 2018. So with the 10-year Treasury currently trading around 1.6, 1.7%, we are certainly seeing some upward pressure in the bond market that could put some downward pressure on pricing, or at least kind of mute pricing somewhat as cost to borrow funds increases. But looking at our charts here, we are continuing to see moderate growth in the market, and we're forecasting 2021 to be a busy year as we get closer to the 2022 tax changes that the Biden administration have started to discuss. Some owners this year are thinking of selling to get out of the market ahead of that and pay their capital gains taxes at 2021's rates versus 2022. So if you have any questions about anything we've talked about in this video today, please feel free to reach out to us. Subscribe to our channel so you get notifications when we post new market updates and market insights to our channel. Great speaking with you today. Stay well. Thanks.